Well, thanks everybody for joining us this morning. This is a board work session, and our other board member, Gary Paone, is, I think, traveling to Florida. Maybe he's already off to Italy. I don't know. But anyway, he will not be able to join us. And as the case with all work sessions, that no decisions can be made by the board during the work session. Minutes aren't taken, but I am hitting the record button and we'll post this to our YouTube channel unless you have any concerns for confidentiality of vendor negotiations. But I don't think that's the case. So, all right, you're okay with the recording?
As long as you guys are okay with releasing premiums and coverage and information like that. Yep, we have no
I
problem.
think we are.
Yep.
And what else do I need to say about work sessions? Just continuation. This is part of our transparency that we're trying to do with owners and keep them up to speed. I'd like to begin by reporting on our meeting that Linda and I had yesterday with Stephen Cataldo of First Citizens Bank, if that's okay. And there was something else I wanted to say intro-wise. It'll come to me, I'm sure. In any case, we looked for an alternative financing option, and CCG really impressed that they bird dogged this out. This is a bank that specializes in HOA loans, if I understood it correctly, and they are owned by CIT, so they have billions of dollars backing them. And he began the conversation by telling us that uh, they will offer us a loan with no prepayment penalty, a $500 fee for closing, no security. We don't have to commit our reserve funds to it. They have an agreement that loan specification that says we're obligated to use our dues to pay the loan. And that sounded good. As of yesterday, their interest rate was 6% APR. The loan would be for 5 years. So we can pay it off sooner with no prepayment penalty. But there you go. 2 board members are required to sign the loan agreement, but they don't personally make any commitment. We do have to do the normal FinCEN identification and stuff. So the terms, we could borrow $130,000 to pay the entire premium that we calculate roughly at $126,000, $116,000 for Arch and $10,000 for other insurers. And if we were to do that and pay it off in 7 months, so it would be paid by the end of 2025, our monthly payment would be $4,360, and the amount of I may be confusing the monthly payment with the interest. Linda, can you help me with this?
Well, I was kind of having a hard time with that too, and I ended up with I had to draw arrows. So this is what I interpreted, and I may be wrong, but I thought he said for the 130,000 at 7 months. I thought was it $7,100? Let me see.
7,174, I believe,
Yeah,
is the monthly payment, and
that would not be monthly though. That would be for 7 months.
right.
So if you take 130,000 times 6%, that's $7,800. So that's, and then you'd have to divide that by 7 months, right?
Yes.
So it seems to me like the payment would be $1,114.30 or $1,115. Am I miscalculating that?
I think you've got it right. Let me run my calculator here. And of course, there's compounded on the interest, so it's more than just a flat 6%. But
Exactly. I mean, I'm just coming up with I should have written down the actual amount per month, and I did not do that. I guess we could call him back, Stephen, and have him clarify that again, just to be
Yeah,
certain.
I'm getting $138,000 divided 7 months would be 19,685 per month payment.
The bank should offer you guys an amortized loan
Right.
schedule. Yeah,
Right, they will. We were just trying to come up with, but the interest is very favorable compared to anything else. And if if we got in a jam, we could take longer to pay. I mean, we can choose whatever amount we want to pay per month is what he said.
that's
So,
wonderful.
yeah.
A thought on that. One is maybe just ask the bank if there's a difference between using this money for the insurance versus using this money for a construction loan. I was telling someone before, like there's a difference in the mortgage interest rate when you do a mortgage on a home, like a HELOC, versus doing a loan on a vehicle.
Yeah.
You're going to see the difference in interest rates. So it might be worth just asking that to make sure you guys are getting the best interest rate.
Well, we can use it for whatever we want. We have enough
Perfect.
construction project, but
Yes,
we can pay for construction bills and use the money then to pay for insurance.
insurance. Perfect.
So
Good.
if we were in a normal situation where we didn't have any construction project going on, then I think this becomes problematic. But
Yes.
so going forward, when we have to pay this in all one lump sum, that will be an issue for us to grapple with as we move forward, because that's going to continue every year, right, Ella? We're going to have to pay the full premium. But maybe
Yeah.
you'll have found us an admitted carrier by next
Yeah.
year.
Yeah.
So, the other thing I wanted to mention at the beginning was the declination from the travelers has to be postmarked by the 13th of April, and it will come to you, Rochelle, I assume, at CCG. And so today is the 15th. It probably hasn't hit your mail, but we need you to be keeping an eye open for that. So, okay.
And
Okay, sounds good. And you said that's the agreement or that
No,
you,
the formal refusal to renew by the travelers, they have to
oh,
get to us
gotcha.
45 days prior, which 45 days prior to May 28th would have been 2 days ago, but it has to be postmarked by that date. So
Okay.
today, tomorrow, something, you should be looking for because we're very interested to see if they fulfill that commitment. If they don't, potentially we could go back to travelers and say, you got to renew for us now, but they of course could change our premium rate. So, but it'll be interesting to see what that letter looks like just for academic purposes, if nothing else.
Yeah.
And Steve, just for clarification, that actually might be a 30-day cancellation provision clause in travelers policy and compliance for division of insurance. I just know that these insurance carriers, like when AmFam was doing their non-renewals, they were giving like 90-day notices. So I do know that they try to give more than 30-day notice.
I thought that the statutory requirement was 45, but this is academic for our purposes. So
yeah.
let's
And I don't.
let's circle back to the most important thing though, which is the loan agreement. So ideally, I think we would, and hopefully you've had conversations with Arch and the other carriers. Ideally, we would make this transition, in my mind, May 28th, concomitant with the termination of coverage with the travelers. Give us what you have learned as of this morning.
Yep. So after you and I spoke yesterday, it was a little after 4 p.m. So it was already after 5 o'clock, the carrier's time. So I did reach out by email. We did make a phone call this morning. We don't have commitment yet in writing, but I do believe there's flexibility. Tracy, what Steve and I spoke about last night is we know there's a 30-day window to be able to accept or decline the quote that the carrier has offered us. We're going to be exceeding that 30-day if we go into binding this effective May 28th. And I don't foresee there being a reason why they would not honor current terms, conditions, and premiums. Again, just would like to get that in writing from the carrier themselves.
Because what the deal is we got to pay the full premium when we bind. So if we get back to First Citizens today and say we're ready to move forward, start the process, they were pretty confident they could have us cash by the 1st of June. So we'd like to close May 15th or whenever, so we have our cash well in hand and can make that full premium payment.
I think we'll be able to make that happen.
So Ella, so when does our travelers expire? Is that May 27th, May 28th? What day
May
is it?
28th.
May 28th. So then do we pick up the new policy with Arch effective May 28th, or is that May 29th?
Nope, we do, we pick up the new policy. All policies for insurance start and expires at 12:01 a.m. on the date. So the traveler's policy would exit out at 12 o'clock, and the new policy would start at 12:01 a.m. on May 28th.
So we're sure to make sure we have coverage.
Yes.
Yeah, okay, thank you. I couldn't
Yes.
remember that. And I'm sure that's true even with our own personal insurance. I guess I just never really thought about it,
Yeah, well,
Thank-
it's not a fun thing to think about.
Yeah,
We're doing this with the
exactly.
other carriers as well, getting them to go with that date is our idea.
Well, and I think the hopes is from what Doug and Stephen and I discussed with First Citizens Bank yesterday is that, I mean, it sounds like we have quite a few homeowners that I've spoken with that are more than willing to just give their 7 months dues right up front. But I think this kind of gives us a little bit of breathing room so that if that doesn't happen, we've got some extra padding there and it'll save us quite a bit of interest. Because if I'm not mistaken, I believe the finance company that Arch had suggested was at 14.99%. So and it's nice to know, and that was just for a year. And it's nice to know that even though I'm sure we will never use the 5 years, that's a minimum that First Citizens Bank will do, is that, and like I said at the meeting yesterday, I really would hope that we would have this paid back by December 31st of 25, since that's when our 7 month dues increase goes into effect. But if that doesn't happen, then we've got a 5 year loan. We don't have to worry about it and we can prepay and there's no penalty or anything. So this really seems like, to me, as a homeowner, the best way to go.
The concern I have is it totally blows our budget, because if we spend 130,000 on insurance with the new carrier plus the 6 months we will have been with the travelers, you add that together and we're going to be way off on our insurance spend. So that's the only thing I was thinking about with that strategy, is it may be best to go ahead and do the full year of payments, so we don't have this whopping, I don't know how that works, but to me, it would be a huge budget hit to go from 121,000 budgeted to what's our travelers payments around $9,000 a month, right?
Almost 10, I think, 9,800 or
So
something like that.
9,800, and I misspoke, it would be 5 months. So we'd have 49,000 plus 138,000. We'd be at 187,000 with our spend on insurance if we did that. So I don't think we can conflate the insurance funding with the dues period of 7 months. Am I missing something, Linda, as I think about that?
I don't know. I hadn't thought about that, actually, to tell you the truth. I guess I was just thinking, but you're right.
I think
I'll
you
have
got
to
to
give
pay
that.
it out over 12 months. But we got the choice. We can do whatever we want with the financing. So this morning, I think our next task is to schedule a special board meeting to authorize the change of carriers as soon as you get back to us, and authorize the bank loan. So that's where I think we're at.
And just oops, I'm sorry. I'm so sorry. I was just gonna say, and Stephen, and of course it's up to the board how you all want to do that. If you want to hold a special board meeting to make those decisions, or if you want to make them outside of the board meeting and ratify them at our June board meeting.
I think it's such a big
Yeah,
decision. It feels better to me to have a special board meeting. And we'll do that, today is Tuesday, so I think we would try to do that. We would send out the announcement for it. Doug, are you available on Friday of this week?
Yes.
And I think I have a very loose schedule, strangely enough, for Friday. So let me just check. Oh, Friday is the 18th. I am wide open. Rochelle, why don't you send out an email blast that we will have a special board meeting at 6 p.m. on Friday for insurance decision making. Can you
Okay.
send that out today?
Yes.
And let's use your Zoom
Zoom.
account if that's okay.
Yeah, we can do that.
Now, if you can't be there for that meeting, then let's use my Zoom account.
Okay, because
I
I
don't
was
think you
gonna.
need to be there for that meeting. I'm taking that back. Let's use my Zoom account.
Okay, so you send me the Zoom info and then I'll send out the email blast. And I'm sorry to hold
I'm
you
gonna
all up.
put
I
in the
just wanted
chat.
to.
I'm gonna put in
Okay.
the chat just the meeting ID because it's just Zoom US, you know. Did I type that right? I mistyped that. No, I didn't. 574-792-2570. It's right.
Okay.
Steve, is Gary still in the country?
I don't I was confused with his plans. I got the feeling he would be, but we will have a quorum with the two of us, so we don't need
Okay.
him.
I have a suggestion, Rochelle. Can you tell us, would Reba be available for a discussion on this business with the insurance being 130,000?
I
Yeah,
can
I'm
reach,
meeting with
so
her
the best route
tomorrow.
for, okay, I was gonna say that would be the best thing because she's, it's already being billed, that we don't want it to incur too many hourly excess charges for the extra meetings with Reba, but she does have one already scheduled for tomorrow. So Stephen, if that's something that you can, I think that it's completely in line with the topic that you guys are scheduled for
Yeah, we're
anyway.
doing a budget review and cash flow projection review tomorrow with her. If you are willing to join us, we would do that. So
Um,
What
well,
I'm wondering is just I'm going to have to sit down with my debits and credits, but I'm wondering, this is just a suggestion. Ask Reba. I'm wondering if they can't show, I mean, it'll be a prepaid, so much of it will be a prepaid insurance. And then each
mhm.
month they just transfer so much out of the prepaid account into the insurance expense, correct? It seems to me like
I
that's the way
believe
it.
so. And the way you can double check this with Reba tomorrow, and I'm also happy to reach out to her ahead of time to ask her. But so what I'm thinking is it would all go to the insurance line, but we can split it up by month. So some of it would go into like monthly. So depending on when payments start, all the ones for 2025 would be the ones that would show deducted from the budget, if
Well,
that
that's
makes
why
sense,
I
for
think it would have.
2025. And then in 2026, we would already know that we have X dollars already
Well,
needing
that's
to be
why I
paid.
think it would have to be a prepaid, because when you got the cash from the bank, you would debit cash and you would credit your prepaid insurance. And then at that point, every month, you would credit your prepaid insurance and debit your insurance expense. I believe that's how it's going to work. Am I scheduled to be on that meeting tomorrow, Stephen, or is it something that
join
I'm
us,
not
we'd
allowed
be
to?
delighted to have you. So I'll send you the calendar invite.
What time is that tomorrow?
It is at 1 p.m. I'm gonna go ahead and send you an invite, and if you can join us, do.
Like to be involved in that because I'm pretty certain that's the way I mean, you're paying insurance for a full year, so it has to be prepaid. You don't just show that $130,000 as an expense in May. So I
Right.
know it's going to be a prepaid, but I just like to speak with Reba
Yeah.
about that. And we
And
could maybe do that at the beginning of the meeting, and then I can exit and you guys could go ahead or whatever with what you need to discuss.
yeah. And I'm pretty sure they can just allocate however much the monthly payment is by month
Yeah.
in the budget so that it reflects properly in there. And Ella, so sorry to interject with other board. Go ahead.
Well, I think we're done. So I'll post this to the YouTube channel. Um, and maybe Rochelle, you hold off for half an hour until I get this posted to the YouTube channel so we could put that in the email blast as well.
Okay, sounds good. If you want to just send me an
Yep,
email
I'll
or
send you
text
the YouTube link
and
momentarily. So
Stephen, I have
okay.
maybe what you could do for the homeowners, since you're having a special board meeting on Friday, is speak again to Stephen at First Citizen Bank and get the exact numbers for the 7-month loan. I guess first of all, the board's going to have to decide how much you want to borrow, whether it's 90,000 or 130,000 or whatever, and then see if you can show a spreadsheet as to how much it's saving the community based on going with the finance company versus going with First Citizen Bank. That'll help a lot, I think, to be able to sell the
I'm gonna
plan.
I'm gonna call Stephen Cataldo right after this meeting and ask him to give us both models in writing. So
I mean, it's a bad situation we're in, but we're in it. And my idea is to do the best for the homeowners and to save us the most amount of money that we possibly can. And a 6% interest rate versus almost a 15% interest rate seems like a no-brainer to me. So, but I think
Yeah.
to be able to show those numbers.
And
And
Linda,
Ellie, you may want to have his contact information at First Citizens because you know yeah, I was pleasantly surprised. So
yeah. And Linda, I concur with you. The interest rate is not only higher with that finance company, but there's also fees involved in that finance company.
Right.
And again, we sent copies of that finance agreement. So Steve, feel free to forward that to the bank so they can show you exactly in apples for apples, like here's the difference in the savings.
well, and it was a wonky payment schedule. We had to
Yeah,
pay the whole thing in
right.
9 months. It was going to really twist us. It was doable, but it was really going to be challenging. So
Well, I think the thing I didn't like is we had to pay 3 months premium up front, but then we didn't get the benefit of that until the last 3 months of next year.
yeah,
So
wonky.
between the interest rate and I mean, if we could have paid the 3 months up front and that could have been for May to June, July, and August, that would have helped us out, especially with all this stuff going on with the projects and stuff. But instead, it's tacked on at the end. And so then my thought was, what if we end up just getting a better deal and we can cancel mid-year? How long does it take us to get our $30,000 back then? I mean, I didn't like that idea. So
Yep. Well, hopefully our brilliant legislature is at work and our insurance department uh, director is on the job. Did you see I couldn't open the email, but the message, but the Denver Post was reporting that the insurance department director has a solution for our HOA insurance issues. So
I've only
something about
been
taxing us
begging.
too.
I've been begging for attention on this topic since 2018, and unfortunately, we're in it. We're knee deep in it, and they're just now willing to come to the table and start brainstorming. So,
Well,
So Ella, I have a question for you just real quick.
sure.
So in order to pass with the slim possibility of getting back to an admitted carrier, possibly May of 2026, are we doing all the right things for this community? And what more do we maybe need to do to hopefully secure that?
Um,
This is painful.
Sure. Yeah. And that's a really, really good question, Linda. You guys, as a community, have really done a great job preparing yourselves to get back into an admitted market. At this point, this is not Peachtree's fault, the reason you are in a non-admitted market. This is clearly direct proof of the hard market in Colorado and the carriers really reanalyzing and deciding how much risk they want in their portfolios. These HOA carriers are not profiting. profiting. If they're not profiting, they're packing up. If they're not packing up and actually leaving the state, then they're being very particular on the type of business that they want. And that being very particular pretty much eliminates all abilities to have renewals on the larger properties or be able to obtain quotes. So you guys have really positioned yourself well. Now we just continue to work with legislation. We continue to work, I work independently with other carriers, consulting carriers, trying to bring new carriers into Colorado, teaching them how to put proper boundaries in place to potentially pull profit so they can continue to stay as an admitted option. So I've got a couple carriers I've been consulting with, and we'll see. We'll reevaluate first part of next year. Tracy always does a great job of starting to shop the premiums 4 months in advance before your policy renews. And so next year we will see what options we have in Colorado, and we will keep you guys informed.
So will that pretty much guarantee if we try to go with an admitted carrier, depending upon what Tracy finds, maybe come January or something, will that pretty much guarantee probably an insurance walk around in order to switch from a non-admitted to an admitted?
I think regardless whether you're admitted or non-admitted, these insurance carriers are doing drone flyovers, they're doing on-site physical inspections. So it doesn't matter which bucket you're in, they're all looking at these properties. They have eyes on the properties. We're scheduling, we have a girl in our office who literally, that's pretty much all her job is as we're moving carriers from one bucket to the other or binding brand new policies, she's scheduling all of the on-site visits from the insurance carrier. And it's not the carrier themselves. I think they hire 1099 subcontractors and give them a checklist. And so they're doing it. But majority of the time, we involve one of the board members and the association manager.
So we would definitely be notified of that then, I guess, since you're saying that one of the board members would participate.
Correct. And upon binding this current policy, it's possibility that we'll see that request for an on-site physical inspection. And again, we will reach out to the board, we'll reach out to Rochelle to make sure everybody's on the same page and we get that inspection scheduled.
Okay, so then one more quick thing, just Rochelle, so will you and the board, as soon as you find out from travelers why we're being rejected or non-renewed or whatever, will that be made known to the entire community then?
Yes, I don't see why it wouldn't. Yeah, we can definitely do that. I'm sure the board would like for that to be the case so that
Okay.
everyone's on the same
I'm anxious
page.
to see that.
Yeah,
The verbiage on the non-renewal, just to give you information, and again, I don't have a copy of the non-renewal. This came from the underwriting department. It just simply said that Collindale 3 Peachtree no longer fits their business appetite. Very vague.
right. Yeah, that's what and you guys, I've seen tons of these just because that's what we're dealing with right now. So I've been chasing down insurance all over the place for my community's non-renewal letter after non-renewal letter. And you're right, of course, Ella, that they don't have specific list of because of, unsafe, sidewalks or missing handrails or unsafe steps or whatever that may be. It's not usually included in the letter. And I'm wondering if they are going to send it by email or if they'll send it by mail, but I'll look for it. I don't see it in the inbox as of now, Stephen, but I'll check my mailbox.
Rochelle, I think compliance is they have to physically mail the
That's what I was thinking.
Yeah.
Yep. So I will check my mailbox at the office, and if it's there, get it scanned in and sent over to you all.
Well, we are on schedule, on progress with the restatement of the budget and the board authorizing vote from last week to have the stairs replaced, have the concrete fixed, have our pavement fixed. We should be by August fully complete, and we'll work with all deliberate speed. So.
Yes, congratulations. It looks amazing. The pictures, keep them coming. The pictures have looked amazing and we just continue to forward them and brag to our insurance carriers about the proactive approaches that Peachtree keeps taking. So thank you.
I just feel like we were so lucky to have Doug and Gary join the board and be such great partners. They have been awesome, and we have had tremendous support from Linda and other owners helping us through this very difficult decision process. And we have had some missteps, but not irrecoverable. And so we are so I just feel so lucky to be in the position we're in. So in a very difficult situation. But the value of our property, we
I
just
have
got
to
a
drop
big
off.
edge trimmed, and it looks so much better today than it did yesterday. Every day seems to bring something new. So, all right. Kim, you can call me right after this. I assume you see the text, my phone number in the text in the chat. So I'm glad to visit with you. Thank you, everybody.
And wait a minute. I just want to say one more thing. I misspoke. I think the way the accounting is going to go, and that's why I think I should be there to speak with Reba too. I've sat here and
Yeah.
done my T accounts. So at the time we get cash, we'll debit cash and credit loan payable to the bank. And then I believe that CCG should be able to do a adjusting journal entry to prepay insurance, and then monthly take it and put it against the insurance expense on a monthly basis. So Stephen, I think we're okay that we don't have to worry about showing the 130,000 plus the 20 some thousand or 40 some thousand we've already spent for this year. So it'll work out fine.
All righty. Thanks, everybody.
Thank you,
Thank you,
Linda. Thank
everybody.
you, everyone.
Thanks for your
Thank you,
help.
Ella and Tracy.